Hello traders, this is Rich from Tradesight. This is the market preview for the coming session, Tuesday, June 11th, 2013. We had a mixed session today where we essentially kind of wandered around for a lot of the day after gapping up. We do have a condition where we did settle below the open in a lot of the majors, which we'll talk about the implications of that in just a little bit. But internally, the market was not great either. We were higher on the day, but the advanced declines were negative on the New York side. Trend closed at 0.89, which is fairly close to the baseline. The VIX was up 30 cents on the day, which is a negative, even though the market was mostly higher for most of the major averages. Let's get down to business and take a look at the ES futures. So here's a look at the ES futures. We were higher on the day, but you can see with the dark body candle here, we did close below the day's open. And since we were higher the previous session, this makes a camouflage sell condition, which implies that we'll take out today's low before we take out the high in the next candle. This could also be an important point where we turn down and retest that 50 DMA, since after only 2 days up here, they came in and started distributing their shares that they picked up the last couple weeks. So it appears as if people are already in the rental only mode. We did have this little bit of a snapback off of the CCI, which did get down to that close to that minus 200 oversold level. We didn't get back up to really retest the high in any meaningful way yet. Do make note that we are 7 bars up now in the secret countdown, and if we get to 13 in and around the previous high, that'll be good enough for a short-term exhaustion signal at least, which could definitely turn into more. Looking at the NASDAQ futures, the NQs, we have the same condition as far as the construction goes. We were higher on the day, but closed below the day's open, so there's a camouflage sell signal there. The chief difference between the NQs and the ES futures is the NQs are very, very close to that exhaustion warning from the seeker. We've already printed 12 days up, and we're actually now going into the countdown qualifier, looking to get a settlement here above candle 8. Candle 8 closed at 3001, so if we get a settlement anywhere above 3001 now, it's very, very likely that we're going to get that exhaustion warning from the seeker study. So near-term levels are going to be support at 8 ace 2968 and 3/4, resistance at 3007.81, and then the next level is going to be these highs right here where we opened these 2 days but didn't hold any higher. That's around 3027 for the NASDAQ futures. Now, as far as the market internals go, the 10-day trend is still hovering just above that overbought area of 0.85. We didn't, even that little bit of a downdraft we got didn't get us really anywhere near oversold, so we're actually closer to overbought still than oversold. And if we get this 0.85 reading or lower, we're going to be overbought here in the market and have a nice little reversal warning in place. One other internal that I want to look at was the NDX versus the S&P. This is the ratio chart. This shows the relative strength of the NDX versus the broad market. So if the ratio is rising, that means there's strength in favor of the NDX. It's definitely curled from these very, very weak levels that we've had in this really gross overperformance of the broad market versus the NASDAQ shares. But NASDAQ has started to circle the wagons here. We're getting up to probably what's going to be a key area here in the ratio, this 1.83 area. If we punch out and get above 1.83, that's going to be a sign that the NDX is picking up some real momentum. But what you want to be careful of is that we don't get back up into this prior area of resistance. We have a couple of touches here, and also print that 13 on the seeker on the NQ chart. So if the NQs print that 13 and this can't get through this key barrier, that's going to be something to figure into the mix, that the reversal might have some actual bite to it. Here's a different ratio. This is the NDX versus the SOX. So when this ratio is rising, the SOX is outperforming the overall NDX. It's actually getting up and breaking above this key area of resistance here that was set by this breakdown here. So this is actually showing us some strength in the SOX versus the NDX, which is definitely welcome. So if this persists, this is the one thing I see out there internally that's really positive for the market. There really isn't too much else internally that's real very positive right now at the moment, but this is definitely one of them. And one more positive here. This is about the last one we're going to find. It's a potential positive anyway. This is the ratio of the S&P divided by the TLT. So this is kind of the risk on, risk off metric. We bumped up against the prior high here in this ratio. This ratio rises when people are trading in favor of the S&P versus the TLT. So this means that they're using the TLT as a source of funds. The TLT is underperforming and stocks are outperforming, at least as measured by the S&P 500. We're back up into this regression channel. Remember this, there's an awful lot of money still in the bond market. Even though bonds have started to correct a little bit, there's still tons and tons of money out there that could potentially rotate from the super enormous asset class of fixed income, especially government bonds, into some equities. So if they choose to do that, we'll see a tag of this upper regression channel, and then we'll have to just take a pause here and see if that needs to recharge, or if in fact it can keep the upward momentum. But for now, we're at the previous high here of the ratio, and this could be potential resistance. We don't want to see it fail here. We do have some momentum here. I'd like to see it for the bulls continue on up at least to the upper portion of this regression channel here. All right, back to the dark side of the market internals. This is the worst of them all, without a doubt. The New York Stock Exchange cumulative advance decline did break this trend line. We had this little bit of bounce back, so what it's really doing is bouncing up to retest this channel. The bulls really need to reclaim that and start printing some positive advance declines. Like we had said earlier, the advance declines today were net about 350 issues to the downside on the New York Stock Exchange today, so we did take another little bit bump down. This is really ominous. This doesn't look good for the market. Usually when the market the advanced decline line, that is, starts to roll over, that usually is a leading indicator that we're actually going to start rolling downward in the market. So rather than lagging, this is usually a leading indicator. This is not a positive sign for the internals. The Nasdaq side was definitely a little bit better. The advanced declines were plus about 700 on the Nasdaq side. You can see that was good enough to get us back up to this regression channel boundary on the downside here, but wasn't certainly enough to make a new high. At this point, the only real hope for the bulls is that the broad market can just kind of hang tough and hold its course, and then the Nasdaq side can really come on. But I just don't like the way the cumulative advanced decline line looks here on the New York side. All right, so here's our multi-sector daily chart. This is not a ratio chart. This is just a straight-up chart. The XAU is still kind of bumping along here at the bottom. I don't know how much juice there is left to squeeze out of this. I think if the market is going to continue higher, it's going to have to get its funding from somewhere else. It's really probably going to have to come out of the bond market. So keep an eye on the bond market, and definitely that S&P TLT cross. The BTK again today was fairly weak. Didn't really perform like the rest of the market. A lot of the big biotech names were lower after having a strong rebound on Friday. The banking index was fairly strong today. The broker dealers were real strong as well, and the SOX was higher on the day, just about making a new high. Let's take a look at that SOX chart now individually. All right, so here's a look at the semiconductors, SOX. This is pretty much matching the previous high close of this move. So pretty strong session. It definitely outperformed all markets. It was up about 0.5%, so it outperformed all the major averages. The trouble with the chart right now is that it's pushing up higher here without really having any kind of a correction. It did do some sideways work, as we kind of expected, around this 8/8 level, which is really kind of a draw. But the thing to be aware of is now we're into the overbought territory in the Gann box here. We're just hovering under the plus 1/8 level, and the secret count is now 11 days up. So we're potentially only a couple of strong days away from getting that exhaustion warning from the seeker study. The BKX was also very strong on the day, but like the SOX, is getting fairly deep into the countdown here. We're now 10 days up on the secret count, so just a few more days and we could get that high probability reversal warning. One of the real weak sectors today was the OSX. Really underperformed. The market really didn't get up too much. It had a negative close today, even though the broad market was up. So this is definitely something that needs to get in gear. This is a late cycle sector, so this really needs to start performing now. The banks and the biotechs usually perform early, and then you really need the the energy names and the transportation names to really pick up the slack once they start to get tired, and certainly the BTK is acting like it's tired. So we need these late cycle stocks and sectors to start kicking in and showing us some relative strength here to keep things moving to the upside. Here's a look at the oil futures. Oil futures didn't do too much. We're somewhat positive, but we're still underneath the static trend line, which has really held trade to the downside for many months now, going all the way back to February. So that level's still in play. So keep a close eye on this 97.5 area for crude. That's going to be a key breakout if they can get that up and above there. And the gold futures are still essentially a source of funds, but I do expect that we'll see some better price action in these if we get any kind of a turn in the market. The other thing I want to talk about was the actual sector here. Let me just pull that up for you real fast. The XAU has that real nice trend termination candle in place. We did pivot off the 0 ace level here. We're now 10 days down in the secret count. So while it's not going to be extended to the downside, most likely if we get to 13 bars, when we do get to 13 bars, it just may be a timing cue that the chart is ready to take a little bit more of a positive approach. Definitely keep these names on the long side ready to go, and note a break above that 50 DMA would be the first time it happened all year. So keep an eye on that. Could be a lot of fun, and we're definitely going to be trading those in the Tradesight lab. Looking for initial reversals and then follow through when that does happen. Well, as always, thanks for listening, and this has been Rich for Tradesight.